Well, Mark Carney used his first trip as prime minister to pitch a closer alliance with European allies as the country aims to reduce its dependence on the U.S. What would that look like? How long might it take? Let's get some perspective now from Stuart Bergman, who's the chief economist and vice president at Export Development Canada, the Crown Corporation that serves as Canada's export credit agency. Stuart, thanks very much for being with us. Appreciate it.
Great to be here, John. Thanks for having me.
Let's just start with the trading relationship that Canada has with Europe, which I think, the obvious comparison would be to the U.S. and what those numbers look like today.
Sure. Well, and maybe taking a step back real quick this isn't about turning our backs on our American partners, right? I think we need to acknowledge we're lucky to live on the doorstep of the world's largest market, and so with which we share integrated transportation networks, common culture, business language. And so it's somewhat understandable that exporters are always hesitant to look further afield. But the situation really now is an opportunity to address some longstanding economic issues that we have here in Canada, including lowering the costs faced by our exporters and diversifying their market exposure, right? I mean, you wouldn't accept a retirement portfolio that's 75% concentrated in one asset. So, why would exporters expect the same? When it comes to diversification, our exporters have unparalleled access around the world, right? They benefit from 15 free trade agreements with more than 50 countries. And of course, the comprehensive economic and trade agreement with the EU is an extremely important one. The EU is Canada's third largest trade partner, with which we share a number of historical ties, a common set of values. Of course, we share common languages with many markets in the Union. Last year, Canada joined the Horizon Europe, increasing our collaboration when it comes to scientific research. So it's natural for exporters to look to want to develop deeper ties with this enormous market.
And anecdotally, is there anything you can share in terms of the interest that EDC has been hearing from Canadian companies? We just got through a segment where I think a lot of people are trying to figure out what kind of fiscal support we could see for Canadian businesses in light of the tariff uncertainty. Are you getting as many questions about new markets as you are about, potentially finding some fiscal help in the short term from these different businesses?
Absolutely. I mean, again, it's oftentimes in periods of crisis where we're really forced to address some of these kind of structural constraints that bind us and that bind our competitiveness. And so we do have exporters that are increasingly open to trading with markets outside of the United States. Europe is sort of the next logical step in that, it's another advanced industrialized market. As I say, we share many common values. We share common business cultures and languages. And so it's sort of an easier step to make your way from the United States over to Europe. And just look at the data. I mean, since CETA has been implemented, we've already facilitated increased trade between Canada and Europe. The flow of goods is up by more than 40% since 2017. Services up by about 50%. Since 2017, that was up until 2023. We look at foreign direct investment, 2A FDI flows, or rather FDI stock, also up by about 50% over that same time period. So there's a huge amount of interest in markets outside of the United States. And this uncertainty that we have in sort of the North American context is a bit of the push that some of our exporters, I think, have been looking for.
And do you think, look, we seem to be, we don't know for sure, but we seem to be on the doorstep of a federal election campaign. And in light of the Prime Minister making his first big trip to Europe, I would imagine we're going to get into more details around how these trading relationships work. I mean, we even saw it in the debate overnight on, policy around industrial carbon pricing. How much do you think, especially for exporters that have historically leaned heavier on the U.S. than anywhere else, how much of a learning curve could there ultimately be in figuring out what these other trading relationships look like, could be at the end of the day?
Yeah, look, I really don't think it's going to take much. I really do think it's a matter of getting out there and exploring these markets. Again, hitting the European market is pretty much as close to trade with the U.S. as we're going to have. And so it's why it's oftentimes the easiest step. When you talk about some of the other things that hold us back, look, change is never easy. And I can't say that it's not going to be free from challenges. There are always going to be issues. There are always going to be, perhaps disagreements over things like non-tariff barriers in the form of local regulations, maybe language requirements on both sides that make it more difficult for Europeans and for Canadian companies. But I'm fairly confident that we can work to address those barriers in order to build a more integrated, competitive, and ultimately prosperous partnership with the Europeans.
And Stuart, when you look at the different industries that have had success, particularly in European markets, or the ones that just on paper, looking at the makeup of our economy and what could be done, are there any examples that you can share?
Absolutely. We know that agriculture has been a huge beneficiary of CETA. There are opportunities for Canadian clean tech companies, critical minerals, vital for the energy transition, growth of the digital economy, and of course, remilitarization efforts. Of course, aerospace, where we share many synergies with the European market. We also know that there are going to be demands on the infrastructure side of things, especially with Germany's move to bypass its debt brake in order to increase spending on remilitarization, on infrastructure, on climate protection in the coming years. I'll also say that Europe has major needs when it comes to the energy side of things. Now, this would require some strategic investment in our energy export infrastructure, including, for example, LNG terminals on the East Coast. But I think that the current situation is really an opportunity for us to very seriously consider Canada's longer-term competitiveness and what are those things that we need to do in order to enhance our longer-term competitiveness. Just maybe quickly on energy also, there's also opportunities to support the nuclear sector. So, there are a range of sectors and industries where I think Canadians are very well placed to hit the ground running in Europe.
I guess just in terms of timing, because it's such a fragile period, and you outline there is what could be for some a fairly easy on-ramp to new markets in Europe. But we keep hearing from businesses, particularly those that have been reliant on the U.S., about how there could be some sobering, quick decisions that have to be made. Whether we're talking about export markets, whether we're talking about more manufacturing prowess at home, anytime there's a conversation around these big new opportunities, at the end of the day, it still feels like time and patience is required, which might not be the easiest thing for at least some of our small and medium businesses. So how should we be thinking as a country if we're going to make this commitment? What do we have to do? Because there's always the possibility that things do get resolved with the U.S. and then we move back to repairing that relationship. What kind of long-term strategy do we have to see from the country and the federal government to just make sure that the businesses that are making decisions based on heated rhetoric in the air make the right ones for the long term for themselves?
Sure. Look, yes, time and patience, certainly with respect to the current situation. We've seen every month there seems to be maybe every week or every day, there seems to be another announcement that's coming out that's impacting our exporters' ability to trade. And so, yes, they are going to need to take some time, have some patience, and assess the situation and what's best for their companies, their particular sectors. But at the same time, we cannot lose this opportunity. It's a recognition that we have grown too complacent in many ways on, again, sitting at the doorstep of the world's largest market. And so now is the time to, not miss this opportunity to recognize some of these inhibitors to longer-term competitiveness and start to address them. So what does that mean? Well, from a company perspective, it means doubling down. It means investing in productivity, enhancing machinery and equipment, in technologies, right? Trade. One thing we've learned over the last 5 years with a number of trade disturbances and disturbances across supply chains is that trade, was once solely about cost competitiveness. These days, that's no longer the case, right? It's about cost competitiveness. It's also about managing your carbon footprint. It's also about enhancing your resilience. And sometimes that's actually going to increase the cost of trade. And so whatever exporters can do to bring down their costs, to enhance their cost competitiveness, that's ultimately what's going to enable them to not just survive, but thrive longer term. From the government perspective, again, I'll go back to what I said earlier on. It's time for us, all of us, to be looking at lowering the costs that our exporters face on a daily basis. And so you already hear discussions about reducing, for example, interprovincial trade barriers.
Yeah.
These are all examples of opportunities that we all have to lower the costs faced by our exporters, enhance their cost competitiveness, And I think it's going to take sort of an effort on the full Team Canada effort from the private sector, from the public sector, from all of us that are involved.
Okay, Stuart.